Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the small caps that were in play today. So first up, let's take a look at ticker symbol ANY. I did get a video out on Saturday on this stock, and so it did follow through today with that 9% gain. So congratulations everybody that's been trading this on the way up. Yeah, it still has RSI here at 66, so it's still below that 70 overbought level. You can see here, Fasto's at 63. The upper wick on today's candle did lower Fasto. As you can see here on today's candle, there's this long upper wick, and that was the pullback from high of day. That was profit taking and dilution. You could see the big volume bars down here, so there's giant volume. Well, take a look down here at a couple of the indicators here, accumulation distribution and shaken money flow. Look at the big spike down in accumulation distribution. So major distribution day, you could see shaken money flow was actually red today on a big volume spike. Look how huge that volume was. And on a green day, you should have an uptick on both of these indicators. Having a downtick, that's a signal, that's a sign that the company is dumping shares. And so that's what happens with these small caps. That's what they do. They sell shares to pay the bills. It's just you just have to trade around it correctly. And so for us, the alert was put out in the chat that it needed to stay above this level here. That at $7 here, that was the just above that level. It's right about there is the correct level. Just above $7 is the what's called the top of the gap, and the share price needed to stay above that level. Dropping below the top of the gap, this red line intraday, that did trigger a signal to lock in gains. Okay, so if you're still holding, this red line right here is your line of defense. That's the 200-day simple moving average at 549. That level does need to hold. If that level fails to hold, the share price could pull back and consolidate. Just below that is EMA 4 at 527, and so that's your second line of defense. And so if those levels break, that's where you could get a drop down to EMA 8 at 441. Now the A and Y has closed above this 200-day simple moving average 3 out of the last 4 days. So it is in the process of turning that level into support. In order to head higher, though, it has to break above the top of the gap. There's a gap from back here in April between low of day on this candle and high of day on this candle. And once you hit that top of the gap level, the share price needs to stay above. If it drops below, it signals that it's resistance. The top of the gap is similar to a 200-day simple moving average, or even up here, the 300-day simple moving average, where it's a really tough level to break. And so, in order to keep the rally going, it has to turn into support. If it does get back above that top of the gap level and closes above, then we will be looking for a run up to that 300-day simple moving average. Now, this is a chart that I posted last week, and then I put an update in the chat here, just warning everyone that this stock has a tendency to pull back once it closes above the upper Bollinger Band. You can see here this close was above the upper Bollinger Band, closed here above the upper Bollinger Band, here above the upper Bollinger Band, this first close here above the upper Bollinger Band. Each one of these closes were followed by a red candle. Now it closed slightly above the upper Bollinger Band on Friday, and then it closed slightly above again today. And so we'll just have to see if it pulls back into the bands. When I put this alert out, it was way up here above 8. And so, I was putting the alert out to everyone that if it's closing up here, it has a chance to work back into the bands. Now it already worked back into the bands intraday, so that's a little bit different. But that it's still the same strategy. It has to hold support here. In our chat, everybody was alerted to locking gains at much higher levels. If you look here at the Nasdaq. Here for A and Y, that they posted that they have regained compliance with the Nasdaq listing rule, and so this is just the 8K clarifying that, and so that's one of the reasons why it did get the big boost. Is so they're not going to have to drop to the OTC. They met the requirements, and so if you look here at the 15-minute chart, you can see where it really broke down. It did make the higher high intraday. It made a high and then a higher high, but it broke down, and on this candle right here, it broke below that middle Bollinger Band. That signaled downside risk. Look at all the red candles in the row going into the close. Well, now it's hitting the key support level. It had been bouncing off of this green line for the last couple days, and so that is the 50 simple moving average, currently at 638. It's below that level right now. It was at 622 in after hours trading. So going forward tomorrow, trading above 638, above that 50 simple moving average on the 15-minute chart is going to signal upside potential, and then it has to get back above the middle Bollinger Band at 745 to keep that uptrend going. If it fails to get back above 638, you're going to see a drop likely down to this 100 simple moving moving average at 525, and that would be a signal that the chart is cooling down. Bullish stocks stay above the middle Bollinger Band and the 50 simple moving average on the 15-minute chart. Okay, so yeah, we've got some action going on in the solar sector, and you know, I did post our RGSE. I've been doing updates and videos and charts, and yeah, it just keeps following through. And so it closed up another 23% today. So congrats, everyone. This is a chart that I made a couple weeks ago, and yeah, where these circles are is where I made the chart. You can see now, look at RSI up here at 81.94. That's very, very high for this stock. So you have to be careful up here. This is where, you know, it starts getting frothy, and it could take a breather. You know, you do have a Fasto up here. It peaked on Friday, and then it pulled back today, and it's starting a bearish crossover. And then you have this parabolic spike down here on plus DI, and notice, I mean, previous spikes, it got a little bit higher than here, but it's starting to hit that level where on plus DI, where it's gonna, you know, possibly take a breather. Okay, so just keep that in mind. There's another red flag on the chart that signals that it could take a breather. There's a gap between high of day on Friday and low of day today, and usually during an uptrend like this, when the market makers leave a gap open on the chart, it's a signal that they're going to come back at some point and fill that. They're going to come back down to that level, and once they hit that level, that gap will be filled. And so right now, what it needs to do, it needs to break. It's hitting some resistance here in this 80 resistance zone. If you look back here in April, so you could see this was support in April and in May. I guess May's a little higher than 90, but this April and then here in June, before it really broke down, you know, this 80 level was a big support zone, and so it hit that zone and pulled back. So it's going to have to bust through this 80, 82.5 level. If it can get above there, then just above 90, you can see that was big support back here in April and May. And so what was once support becomes resistance. And if it can get above that, the big level is that 300-day simple moving average up here, and the 400-day simple moving average. They're both at 97 and 96 there. And so that if it hits that level and stalls out, that could be the level where it forms a temporary top. You can see here in the past, you know, it's topped out at the blue line at the 300-day simple moving average. That happens many times, especially when you have a parabolic push. I mean, look how steep this run is right now. It's starting to get an Eiffel Tower kind of pattern, and that is unsustainable. Today's close was well above that upper Bollinger Band, and just like I said with ticker symbol A and Y, when that happens, the candles like to work their way back into the bands, similar to you know, right here. You know, it closed above, worked back in, above the upper Bollinger Band, above the upper Bollinger Band, above the upper Bollinger Band, above the upper Bollinger Band. Notice how they work back into the bands when it gets above that level many times. And so that's what's likely to happen here. And so if the candles do work back into the bands, what you want to see is this red line hold. That's the 200-day simple moving average at 71. If that level holds on a pullback, then RGSE can keep pushing higher. If it drops below 71, look for a drop down to 64 to fill that gap. A drop down to 64 would fill the gap. Okay, so if you look here at the 15-minute chart, you can see it closed with a symmetrical triangle pattern. You can see you have an ascending support and you have descending resistance, and one of these lines is going to break tomorrow. Okay, and so if you have a break below the middle Bollinger Band at 75.3, the dotted purple line right here, that's going to signal downside risk, and that's where you're going to get a drop down to this gap. Okay, the gaps between low of day today and high of day on Friday, and you can see here just above 64 cents is the bottom of the gap. What you're looking for on a break below 75 is a drop down to 64 to fill that gap. If that happens, it's likely to come down there and hit that 100 simple moving average at 61, and then you look for a technical bounce after a downward gap fill. Now to the upside, if it holds 75 here, it needs to break above the descending resistance. It needs to make a higher close. It has to break above 79 and then this 84 level, or 81 level, 79 to 81, two big levels to break above. Okay, so let's look at the solar sector. This is TAN, the solar ETF, and yeah, check it out. It doesn't have a lot of volume, but it is heating up. You have the RSI and Fasto both in the bull zone. Check out how you have plus DI breaking away from ADX or you know, from minus DI and ADX down here. And so, yeah, while oil is breaking down, we have, you know, the solar sector heating up. And so, yeah, if you were looking at the USO chart, you know, at least the last month, you know, USO has been under pressure for a couple months. But yeah, this has a nice uptrend going. At the start of November here, on November 1st, you can see there was a close above the dotted purple line. That's the middle Bollinger Band. That level has been holding. Okay, as long as that holds currently at 1983, this uptrend is intact. You can could see here it had this downward channel. There's descending support, and it broke below the channel, and then it got back in the channel, and right now it's hitting the top of the channel. You can see descending resistance, all right, and it hit right up there in November, and so it's right back at that level. And so if it breaks above this descending resistance line and has a close above, that's going to be very bullish. That'll be a bullish change in trend. That should signal that it wants to push higher, and then what you're looking for is a break above 21. That's the high close here on the 7th of November, and that's the 100-day simple moving average. Trading above 21, 21.08, that should be the signal that the solar sector wants to keep running, okay? Yeah, it is, and like I said, it's above the 58-day simple moving average and above the 20-day simple moving average, the middle Bollinger Band, so it has a really nice uptrend going. And so if you're going to look at the solar sector, you have to take a look at First Solar. So let's look at ticker symbol FSLR, does trade options. Keep an eye on 50 on RSI. You want to see it break above 50 and stay above that level. Notice how it's been in this, this has been the resistance zone. It's been failing to really get, above 50 here. You could see every time it gets up here and hits this 50 zone, it tops out. And so you're going to know if the solar sector is really heating up by whether or not, First Solar can bust through this 50 level and get pushing higher. You have nice, relative strength building here. You could see it was at oversold levels here, and it's been rising. And so you have this nice ascending triangle heading back up into the key resistance level for RSI. And so if we can get a break above 50 here, that should be your signal that, okay, yeah, our RSI is it's still pushing higher. Otherwise, it could top out here, okay? And so now you have Fast O in the bull zone at 57. There's a lot of room to run until oversold levels. Check out the bull cross today on 80X. The green line crossed over the red line to the upside. It's still very tight. Look how low it is. I mean, you have a lot of room to run here if it can get moving to the upside. And so this is very similar to the TAN chart. It had this downtrending channel. You can see descending resistance, right? And it keeps hitting the red line and failing to break. And then it has descending support, okay? And it broke below that level, and then it got back in. So it worked its way back into the channel, and right now it's hitting the top of this multi-month channel. The top of the channel now is lined up with 44, okay? If it can break above 44, you can see that's also the high close in November. That should be the signal it wants to head higher. And then you have the 50-day simple moving average at 45.29. It tried to get above that level back here in August, and it failed to hold each time, and that signaled the temporary top. If it were to turn the 50-day simple moving average into support, that would be your clear signal that the solar sector and First Solar is trying to push higher. Notice how there was super light volume on the holiday Friday, the shortened trading day on Friday. It just seems like the sellers are exhausted at the point right now. You've got, you had some big loading down here at the bottom with some volume spikes, and now it's just going to be all about breaking through 45 and turning it into support. Check out VSLR. So this stock has a really nice uptrend going. It is at 70 on the RSI. Fasto's at 98. Yeah, it's pretty frothy on here, but it is breaking out. That's why I wanted to show you the chart. It broke out on last week. Okay, there was a high close horizontal resistance level from this July high close, this red line. And then last week on Tuesday, you could see here there was a close above that level. That signaled upside potential. They pulled it back into the close last week, and it came down here, and it's been holding the middle Bollinger Band at 562. As long as that dotted purple line's holding, this uptrend's intact. And then today it closed above the high close from last week, and so now it's breaking out. It could have formed a double top right here, but this clue last week, the close above high close horizontal resistance, was your clue. Okay, it wants to keep pushing higher. It's making new high closes, and today it followed through with another push higher. Now it did bust through that upper Bollinger Band, and so when that happens, you have to always think about them pulling back. What you really want to see now is you just want to see EMA 4 at 608 hold. As long as that's holding, it can keep breaking out higher. Now when a stock is breaking out on the daily chart, we like to look at the weekly chart to find the next key resistance levels. As you can see here, this is a multi-month chart. Each candle represents 1 week of trading as opposed to 1 day of trading. And you can see here it's breaking out above 2017 and 2018 high close horizontal resistance. And notice I just noticed it just now, but it's got a couple of patterns within it. But if you just go between here and and right here it looks like a cup and handle pattern. You've got the cup and handle, and then now it's breaking out of the neckline. And then maybe it's a double cup, cup and double handle, whatever you want to call it. This was the big resistance level right here, and it's breaking this week. Now keep in mind, this week's candle, it does not set until the closing bell on Friday, so they could pull it back, similar to right here where you have the upper wick, because this is all this is times where it broke above the red line interweek, but it failed to close above at these upper wicks. It's going to be all about the close. A close above this red line should signal it wants to head higher, and then you're looking for a run up to $8, okay, because that was the support from back here in 2015 and the resistance in 2016, and that should be the next target if it can stay above this 590, we'll call it, resistance zone. Okay, so yeah, take a look at SPWR. Now this stock is making a nice move today, closed up 16%. This is does trade options as well. Bull zone on RSI, Fasto's getting frothy up here at 90. It has a parabolic kind of spike here on plus DI. Last time it topped out at 40, so you're getting pretty frothy here. It's a big move. Keep in mind this is on a 3-day run. Okay, so you have the 3 green volume bars in a row with the big volume spike today, and so it could take a breather tomorrow. You never know. Right now it's going to be all about staying above the gold line. That's the 100-day simple moving average at 693. If it can hold that level, it can push higher. And then what you're looking for is a run up here to the 200 and 300-day simple moving averages and the 750 to 765 resistance zone. Now if it dropped below 693, you really want to see, and the candles worked back into the Bollinger Bands like I was talking about earlier, you really want to see this 50-day simple moving average hold at 573. It's best if the share price stays above the 50 and 100-day simple moving averages. That's when it can push higher. Last time it had this similar kind of setup, it was like back here, it got above and it ran to the 200 and 300-day simple moving averages, and so that's what you're looking for here. Now if it comes back up to this blue line and it hits 764 and it fails to get above the 300-day simple moving average, that'll be the temporary top and lock-in gain zone. If it can break above, the last time it ran up here to this 8 to 10 zone, and that would be the next target. So we're just going to have to see if it can follow through. It did have a nice volume spike today, so you can see the big volume spike, but many times when you have a multi-day run and then you have a big volume spike and push above the upper Bollinger Band, it acts more as a climax spike than the initial. Like if this happened at the start of the run, similar to here, you could see the first volume bar was a giant volume spike, and then it pushed higher. Many times when you build up to a big one, it's a climax, but this could keep pushing higher. The solar sector is heating up. This has potential for a new uptrend and for a move up to $8. So, if it pulls back in the bands, don't take your eye off the prize. It could be a nice trade still if it can hold support, bounce off of it, and keep the uptrend going. As long as it stays above EMA 4 at 649, this chart is super strong and it can keep a new uptrend going. Okay, let's look at TYME. I'm going to change it up a little bit. Just putting this one in here because it was a top percentage gainer today. We had this one in the chat in the morning. You can see it had a big volume spike. This is the largest volume since way back here in June. It closed today above the middle Bollinger Band, the 50 and the 100-day simple moving averages. It did end up getting above that 200-day simple moving average, so we were looking for that. Now it needs to hold that level. If it can stay above 266, it can keep pushing higher. It also closed above September high close horizontal resistance, so you want to see it stay above that level. 310 will be a big level to break. You can see that was the top of the previous level. And the next moving average to break is going to be the 300-day simple moving average at 339. And then finally, let's look at IPCI. We got some chatter in the chat on this one, and so I want to put this out for you guys. It closed up 8.5% today. You can see it was under 30 on our side for an extended period of time. Now it's above 30. You've got Fasto up here above 50, a bullish crossover in ADX, so the chart is heating up. Now the thing is though is you have to be careful because what type of pattern do we have here? What is this? This is a sideways channel. Okay, look how long it's been going sideways here. Since this gap down open right here, you're looking at 1, 2, 3, 4, at least 5 weeks of sideways action, and that's no fun to hold through. You know, look at how light the volume is, you know, during the sideways action. So today, it's interesting because it did have a giant volume spike, and it is turning the middle Bollinger Band at 52 into support. It's also was trying to push higher, and after I was trading, they pulled it back. You know, there's talk about some chatter about something. I don't listen to the chatter. I'm just following the charts. I don't need tips. You don't need tips if you know how to chart. So just keep that in mind. A lot of times the tips are gonna burn you. You're better off just following the charts. Follow the charts and tune out the chatter. Just a suggestion. If you look here above the high close horizontal resistance here, it was above that level intraday at 58. It needed to close above that level to signal it wants to head higher. If it fails to break 58, it's just in this really tight sideways channel that it's been in the whole month of November. Now once above that 58 level, then you have the high close from this very tight channel back here in October, which is around 61. 62, something like that. And then just above that is the bottom of the gap. You can see here there's a gap between low of day on this candle and high of day on this candle. And the bottom of the gap is always tough to break. And so it's going to need to get up here around 68 or so to the bottom of the gap, bust through it in order to make a run to 80. Now, so the volume spike's interesting, but you know, it's only going to get moving if it can get above this 58 and 62 level, and then it has to break above 68, the bottom of the gap. So it has three big resistance levels, and it's been in the sideways channel. The good thing is the chart is wound tight. If you look at the upper Bollinger Band, it's way up here, and then look how the lower Bollinger Band was off the chart, and then now look at the Bollinger Bands. This is the upper Bollinger Band, and this is the lower Bollinger Band, and see how tight they are. They were super wide, and now they've gotten very tight, and so now you have the lower Bollinger Band at 45 and the upper Bollinger Band at 58. And so and you can see it was busting through the upper Bollinger Band intraday today, but it failed to close above. What you're looking for now is a bust through that upper Bollinger Band and a close above, and that should be the signal, okay, it really is breaking out to the upside. Now to the downside, if it were to break below that lower Bollinger Band at 45, that's going to be a signal that the chart's breaking down to the downside. So it looks like it wants to push to the upside, but it has to bust through that upper Bollinger Band in order to head higher. Okay, thanks a lot for viewing this video. If you'd like to learn more about tight Bollinger Bands and gaps and volume spikes and ways to trade, please come check out the premium chat. I have to give you access to the premium chat, so when you get in there, you know, and I send you a message welcoming you, please accept the free trial and check it out. All right, thank you very much.